Good morning, friends of independent asset management and free markets. I have a few things to share with you today, but please don't forget to send me a like button. It helps the channel tremendously, and it would also be a good idea to give your friends and business associates a hint that they might use this information for their personal benefit. Now, what are the items that we want to discuss today? There's obviously the very topical issue of cryptocurrencies and crypto investing. The other thing is how to measure your portfolio managers and how to find a portfolio manager that is suitable for your investment goals. And the last is how to deal with so-called investment advisors, client relationship managers at the big banks. First of all, another quick comment on the growing importance of ETFs, exchange traded funds. There is more and more the trend to extend their range of products and include actively managed ETFs. These are basically investment funds in drag. You buy an investment fund, a so-called active ETF, and the fund managers can change the strategy on a day-to-day basis. This is in contrast to what traditional ETFs have been doing. They were mostly investment vehicles to shadow an index. For example, the S&P 500 index is the most prominent of them. So basically, there was no active allocation. There was no selection of shares. Basically, the ETF held the funds, the shares in exactly the proportion they were represented in the index. Now you have these actively managed indices, and obviously it is an opportunity for the investor, that's you or your investment advisor, to second guess the movements that the fund manager of the ETF is making. It's basically, you could as well buy a traditional mutual fund. There are obviously some complications because the mutual funds cannot be bought and sold that easily. There are quite substantial costs, and the ETF, the active ETF, is basically traded on the stock market on a minute-to-minute basis. We'll see how this works out. I'm a bit skeptical. I have to still get my head around it. And if I cannot figure out exactly what to make of it, I don't think the average investor is in a better position. The next question is fund management by banks, relationship advisors in these banks. I think this is a big problem because, in contrast to a fund manager that is dedicated to investing money, the relationship managers in big banks such as UBS, Morgan Stanley, JP Morgan, they are basically just a go-between the actual fund manager, the people who make the decisions about what to buy and sell, and you, the customer. And they are under tremendous pressure to produce commissions. So there's always the temptation that they might sell you products that are not 100% suitable, but they pay them a high commission. And as the bank puts them under pressure, there is a little bit a slippery slope. And latest news, for example, one of the biggest banks, UBS, may start to allocate relationship managers that are not necessarily the ones you want to talk to. So basically they get moved around, they get put into teams, they get taken out of teams, and the link between you and the relationship manager is becoming a very loose one. Again, you can ask yourself, is this to the best interest of the customer, the investment customer, or the bank? And last subject I want to touch upon very quickly is the growing, I would call it, craze of crypto investment. I would warn you to be extremely careful. Maybe if you invest via very well established institutions that provide a crypto trading service and a crypto custody service, you are relatively safe, apart from the problem, where is the price of these crypto assets headed? I mean, if Bitcoin trades at $100,000 and other people say it will soon be $200,000, it's basically pie in the sky. It might as well drop to 50,000 within a very short time. So basically it is a gamble, it is a lottery. It might work, it might not work. You might as well go to the casino and put all your money on black or red, and you double your money in a second. Apart from this problem, don't forget, this is just a transfer of wealth. If you buy a Bitcoin at 100,000, that means you basically pay somebody a massive profit, and that person is better off by $100,000, whereas you basically have put your hard-earned money into an asset that I would say is a dubious asset at best. So in any case, these are a few random thoughts. I was a bit behind my schedule. I was not 100% focused. I had some other work to do with good customers, which reminds me, if you need any help in managing your money, what strategy to follow, I'm able to give you personal advice, but it has to be in the form of a in-house advisory relationship within maybe your personal trust or holding company, because I'm not regulated to give investment advice to the great wide public. So I speak to you soon. I hope this has been helpful. Please recommend the channel, and thank you very much for your attention.